Hello traders, welcome to FreeFX. Today is obviously Tuesday the 6th of December. We have quite a lot to talk about, but I'm just going to try and keep this short. I haven't really got any major updates on this particular index, the S&P 500, in the form of SPX. But what I've been posting about on Twitter, if you sort of follow my channel, is that, maybe not, but anyway, just kind of briefly, if this is your first video on FreeFX, I trade SPX rather than Forex, although the name suggests otherwise. And so I did obviously trade Forex for a long time, and but I decided to keep obviously my name, so it will probably forever be associated with FX, but I might change one day. In the meantime, so what I really want to talk about is how things are shaping up for this week. This is the blackout week before the FOMC rate decision next week. So clearly there isn't much fundamental backdrop that's going to impact price. But obviously we've had a technical break, or breakthrough rather, not break. In fact, quite the reverse. We've had a turn, as you can see from this weekly chart, which I prepared quite a few weeks ago, and it's sort of been shaping up nicely. And this is basically this week's action. This red candle right from above the top trendline channel, trendline. So you can see that there is some predictive value to the CCI tops. And I've talked about these before. If you haven't seen these before, I haven't just put them up like today. I've had these on for a few weeks, and you know, I sort of looked at these tops and was looking where we were going here, and decided to have a double channel, because you can see there's a kind of like a filter area both times, and there's a sort of filter area, and this has sort of been similar, but it was just kind of a neater way to, also at the bottom there you can see there's action there. This is actually sort of 3800 level, 3900, which is kind of the bottom of this range as well. So that's also to do with sort of horizontal levels as much as sort of sloping trend lines. So but anyway, so and then I started looking at the CCI. Now the CCI on the daily, and I'll come back to that, had some divergence, and definitely about 2 weeks divergence between price and the CCI generally leads to price following suit. That's going to be my observation. It's not perfect, but it seems to have some kind of value. So and on the weekly, like here, you can see that the turn. Now the turn I thought originally was going to be here, the week of the 14th of November. On this red candle, and then I shifted this sort of 1 week and then another to here, and then finally this is kind of where the turn happened basically last week, and you can see we're now turning back. Now the previous turn back in the 15th of August week was basically 7 weeks to the downside with a middle green candle, and the previous one was a 7 week to the downside with no green candle, but the middle candle was a very long green candle initially and then retreated back. So that can catch people, and it might catch me, but I'm becoming wiser to some things. So I'm going to check my leverage, check my margin, and be wise to not get into these enthusiastic with sort of adding on to my position. So I have one position left short, and that's going to basically my target, doing the sort of 7 week target, is going to take us down to here, which is the bottom of the trend line, or the internal parallel channel, so the inner channel. So that's down to 3300 almost. And I've discussed this again, that 3400 is the pre-pandemic top. So that was the pandemic there, 2000, and let me just kind of shorten that so you can see. So that was 2020. So this is 3350 more or less. So just like how 3420, yeah, the pre-pandemic high was there. So that would take us to here, and it's just lower than that. So we're looking at roughly around these levels anyway. So 3300, which we've kind of seen again after that high back in September 2020. So anyway, boring bits done. Let's move on to something else, which is the weekly. Now, the weekly is interesting because obviously we have quite a few things happening on the weekly. If I just sort of auto fit this to the screen, you can see we've had the daily there, 2 red candles. Now, obviously we've had this before and it continues to the upside. But here, obviously, we've had overhead resistance on a 200-day moving average. We've had the 4,000 level, and we're back below that, and so on and so forth. So, you know, you're looking at something similar to this. And here's the divergence I was talking about. Here it is. Now, I marked it before, just got rid of it because there was too much information there. So I could quite as easily bring it back if I do an object tree on TradingView, if you're not familiar. This brings back all the things that you put on, that you've hidden, and there's commodity channel index, so the things on there, and I think it was there's quite a few of them, so let's see if is it that one. No, it's not that one, so it's another one. Let's see, no, not that one, maybe this one. Anyway, I'm going to try a few because I can't remember which one of these it is. It's not kind of marked individually, so they will be here somewhere. Now, while I try that, just to tell you that there's one divergence there marked. If I'll just leave it there, and the other one I think was not quite, yes, but also I think it's chronological order, maybe, maybe not, maybe sort of, I could obviously rename these, but that one, yeah, maybe. Don't seem to be getting the right one, but anyway, one of these, maybe it's this one. No, one of these is the one that that I'm interested in, but I just can't find it. It's sort of that one, but not really. Let me see. Is that 2 weeks? 25th of October to, yeah, I think that may be the one. I think that is the one. Okay. Just bring it back to the 4. Yeah, okay, that's the one. So, divergences. Let's talk about divergences and just hide the object tree. As well as that, I'm going to bring up the VIX as well. And here's the VIX. So, back in, when was it? I think it was March or something. I was looking at basically the VIX and it was below 20. And then I think it was March, or maybe it was down here, August. I think it was March. Anyway, this year, sometime, I was looking at the VIX sort of below 20 and saying that when the VIX would be above 20 and the ATR would be above 70, then that was going to be the moment where we'd see some sort of action to the downside, and that's sort of that was proven right. This big sell-off that we saw from August after that so-called rally was also proven true, and now we've got this bounce. Now we've had a zigzagging down to this, so it's not to say, but it's a fairly large bounce, and I think you know, we're up to 22. This is starting to move low, and we've got this sort of space to fill, so it might just continue. On the divergence side, what's interesting, as I said, is that here we've got it from end of July to the middle of August, about 2 weeks, and here it was from end of October to the 11th of November. So that's yeah, it's about 25th of October to 11th of November. It's about 2 weeks as well. And then while this was going on, I'll just hide the VIX, it's a bit difficult to see otherwise. You could see that okay, the price was essentially moving higher, making a high, whereas this started coming down, price kept going, and then sort of, it's kind of 2 weeks, if you like, that really it's the second bump that you should measure it from, when it starts kind of going lower and this keeps going higher. So, you know, and then this is obviously clearly heading back to zero, like here, and price starts to conform. So here, if you see what happened to price, it kept going for 2 weeks and then it turned lower, and here it's sort of the second bump is slightly lower, so actually maybe diverges from there, and 2 weeks, and then we start heading lower here. So it's slightly late, but not by much. one should say. This was clearly kind of leading the way. A bit more responsive here. It started here and it's had a sort of major up on Wednesday when Powell was speaking. But anyway, so that's where we are. And I really got nothing else to show you except this. And technically speaking, we have a week of no updates, news, etc. So it's really quite a blank space. And when the 2nd of November Fed rate decision came, which I'll just remind you, it was this one. You know, there was a blackout period before, so that was the Friday 28th, and all this week essentially from the 24th there. So the blackout week where there was not particularly anything going on, and we had a sort of rally here, and then the Fed rate decision on the Wednesday back down. And then we had the CPI on the 10th of November, massive, I think it was 5.5 something percent rally. So the media blackout week is always a bit treacherous because you can have a big rally without the sort of the Fed trying to talk the market down a little bit. But this has been a different week because it's actually been moving lower. So if the Fed rate decision comes out with 50 basis points, which is highly anticipated, but the rhetoric, whatever, moves up a notch or whatever, or maybe there's more at play than just what the Fed says. Maybe it's starting to be a risk-off environment where there's recession fears, etc. So there's quite a bit more. I think the Fed is almost discounted now, and the big worry is the recessionary forces, which are at play. I mean, the 210 spread, as I said, is really -7 in the negative 70s. So that's you know, quite a concern. Very deep recession inversion signal. So that's obviously going to be on the mind of many. But that's a micro thing, and you can't really trade on that necessarily day to day. So I'm going to finish here and wish you a great rest of the week, and I'll see you in my next video at the end of the week. Take care.